Hey guys, Louie here, and happy Sunday. I thought I'd do a quick market review and have a little discussion about my progress on buying the SLV and selling covered calls, as well as a little market overview. And we can take a look at the price of silver as well. So you might ask, how does someone who is very conservative make money in this environment? Well, first of all, as I have been saying for some time now, I felt the market was very toppy, having gone from 7,000 up to 27,000 over the last bull run. And I have pulled my money out of stocks, mostly because I'm older and want to have money in retirement. But I also am a silver investor, and I also want to make income on my money. So the easy part was to get out, right? I mean, some, all, whatever amount of your money you want to get out of the market, you just place the order and you will be in cash. And then what to do? Well, I have been shorting the Dow with the SDOW, the SDOW, and that has paid some nice dividends. So I'm happy to do that. I'm currently not short, although we're having massive sell-offs. I jumped out at the last rally and did not re-invoke that short, but maybe I will. I'm not sure. I like to do shorts after a rally, so I have been instituting the shorts, around the tips of the rallies, and then covering, when I think we've had a nice solid drop. So that has been working, but for those invested long in the market, it certainly has been a painful couple of months. And I do believe the economy is weakening. I've been saying that the signs were there for some time, as much as a year ago, that the most of the strength in the economy was somewhat of as a sugar high, instituted mostly through tax cuts and optimism and belief that we were strengthening America. And more people have gone to work, so I can't fault that belief that America is getting stronger, but the foundation was very shaky. That's probably enough on that topic, but it was very clear when rates started going up and tax breaks were removed for middle income property owners with substantial money in the real estate market, that real estate was going to start to tumble, and that rates going up would start to stall the economy, and all of the shenanigans that were played by the Fortune 500 in buying back their stock and expansion and whatnot was going to come to an end, because you just can't you just can't have a fake economy, right? A stimulus, which is what Trump was doing, massive stimulus, with no regard to the deficit, only works for some period of time, and then someone pulls the floor out, pulls the rug out. Whether that's because of trade deals or because of inflation. I was shocked to see a recent thing I was doing at work. I was shocked to see the consumer price index, the most recent year, up over 4%. Okay, so inflation is roaring back in the CPI, with some people predicting 5 and 6, right? So I think they're having trouble keeping the genie in the bottle at the same time as the economy is weakening, and there still is no tangible control of the debt. So there's the backdrop, and it was pretty clear to me the market would be headed down. So this is where we are right now. We started around 27,000, and today, Sunday, what is it, the 11th or something, we are down at 24,400. So what is 24,400 divided by 27,000, or 27? We've had about a 10% drop in the market. So that can be painful, although many people had gigantic gains over the last few years, so that probably doesn't hurt too bad. But you know, my prediction is that we head down from here. This is really, really bearish, these giant red candles. So you know, I think our next stop is probably around 22. Let's get to a longer chart. 3 years. Here's a 3-year chart. You can see how extended this market is. There's your double top, and now bear flags. You know, I think we'll stop somewhere, you know, we'll ratchet down to 22, maybe 20, and I don't even know if it'd be over then. But what am I doing with my money, and how am I tying that into my belief in silver? Okay, that's where I'm going with this. I'm going to show you an update on a video I did a while ago where I was buying the SLV. Now, before you say don't have paper silver, okay, I have plenty of tangible silver, and I also had money that was out of the market looking for a home, looking for a decent rate of return. So this is in addition to my physical stack. I went in and I purchased a large quantity of SLV, that is the paper silver ETF. Okay, so let's go ahead and take a look at the SLV. All right, we are in the SLV, and this is a 9-month chart. I'm only showing you the last half of it, but the SLV trades about $1 less than silver, so don't let these prices confuse you. It's about $1 more for the actual tangible. So I purchased the SLV somewhere back in here. It was between 1350, 1375, something like that. Okay, so that was the purchase. And I do not mind owning the SLV because I do believe in the long-term potential for silver, and there seems to be a pretty solid floor around 14. That's in the tangible, right? Every time it's gotten down to 14, it's had a pretty solid floor. And the SLV, that's maybe 1325, 1350. So I feel like there's a pretty solid floor under SLV, but I don't just buy it and hold it. Well, I actually do have some other SLV that's a long-term hold, but this was a larger quantity of SLV, which I wouldn't typically want. But let me show you how that is doing, that SLV purchase. Okay, pardon the small screen here, but what you see in front of you is my purchase of the SLV. So we purchased 1,000 shares of SLV at 1358. Okay, so you know, very, very similar to where it is today. Well, actually, it's gone up. It's 1373. So I got in at a good price on the SLV, and that was, you can't see it here. Well, maybe I can make you see it. Hold on. All right, that was $13,730 purchased on the paper SLV at 1358. And you know, I felt that it was probably going to bounce around this level for a while. It turns out that was correct. This was a couple 3 months ago. Right after the same day that I purchased the SLV, I wrote covered calls. Now the covered calls were the calls that I wrote were January 18. I'm sorry, expiration January 2019, $14 even covered call. All right, I wrote that covered call, and hold on one second. I wrote that covered call, and when I did so, I was paid 54 cents. Okay, it says price paid, but that's actually the price that will be paid to me when the calls and if the calls go to zero. So that represented 54 cents on how many contracts? 10. Okay, so this is 10 equals 1,000 basically in the call world. So 54 cents times 1,000, that's about 500 bucks, right? All right, so that is the relationship between the SLV and the covered calls. And those covered calls were written with a strike price of 14. So they were out of the money by about 42 cents when I wrote them. So they had a substantial investor interest at 54 cents. Right? Now the object here was to ride it out if silver continues to languish, or bounce around. That 54 cents is mine come January 2019. What's happened since then? Well, my silver has gone up from 13.58 to 13.73, so I have a $145 gain on my silver, which is, it's hard to make silver generate income, right? But in addition to that, I've also got a $284 gain. I'm sorry, hold on. I have got a $130 gain on my silver, right? So, but that's luck mostly, that silver went from the SLV went from 1358 to 1373. The options, the calls that I wrote, have gone from the price I sold them at, 54 cents, are now worth 25 cents. Okay, remember the strike price is 14, so silver SLV is at 1373, so they're paying 25 cents for the potential to have silver go up beyond 14 prior to January 2019. But that's a time-limited game, so I can just wait that out. And if silver stays below 14, then I will realize the full $500 profit on this. The calls will expire worthless, and I'll get $500. If silver stays between, SLV stays between $13.50 and $14, I'll still have my silver. So that's working really well. And right now, if this were January and these were expiring, let me show you what the returns would be. All right, so assuming that the options expire worthless, if this were January and everything was the same, I would receive, I would make the full $540, right? Oops, this is in the wrong place, hold on. I would make the full $540, plus today I would have made $145 on the silver, so plus 145 equals $685. The investment in the SLV was $13,730, so divided by $13,730 equals 5%. All right, so what we're talking about is a 5% return on silver, and again, I'm fast forwarding to January, but I don't expect this to go against me, but a 5% return on silver over a couple, 3 months. And, that has worked really well, I think. If silver does go above, SLV goes above 14, they'll call my silver away and I'll get paid $14 for it, right? So that would be an even larger gain. But then the the option would change value, so the option would start to have more value until it expires. But I believe even if they call my silver, I'm pretty much guaranteed to get the full keep the full $540 in profit. Now, had the SLV gone down, I would have had a buffer, right? So if SLV had gone to $12, well, clearly I would have lost money on the SLV, and that would have been mitigated, that loss, by worthless options. So I would have still gotten the $540. So, but yet again, I would have SLV, which is an asset I believe in. I don't mind keeping it, holding it. Now, I don't know if I'll liquidate this or I'll look for a dip. Lately, we've been having 50-cent moves in the SLV, at which point you could buy the SLV on the cheap, wait for the 50-cent pop, write the covered calls, and then you could write the same call out to April, or you could write leaps, a year from now if you wanted to. But nothing else in the fixed income market that is safe is paying 5%. I mean, I'm turning between 3 and 4, no, between 2.5 and 4 on my fixed income investments. But I'll tell you what, that's a whole lot better than losing 10% of all Louie's money. So I'm happy with my fixed investments, and I'm happy to be experimenting with the SLV, getting better at writing these covered calls. So not sure what you're thinking about the market right now. I think it is headed lower. I don't mind holding a commodity like SLV, even though I know I don't own it. But if I can make silver, which I believe in, turn 5% over a few month period, um, that's pretty good. And the only thing that would be catastrophic is if, silver went to $10 or something, and then that would be a world of pain. All right, so that is the update on my covered call strategy. I'm leaving you with a picture of the Dow and advising you to, I'm not a financial advisor, so don't take this advice and run with it, but the market looks really shitty, and do what makes sense for you given your risk profile and your age. But I'm really liking being out of the market, and I'll tell you, people are all acknowledging that we are in a very weird and dangerous point in time. I think bad stuff is in the future. I was talking to the real estate agent that I sold my house a year ago and got out at the top. And I was talking to a couple of real estate agents, and they are saying that the market is completely dead. Okay, and some of these people are people that really were not that acknowledging that real estate couldn't keep going up, but and people are putting their houses on the market, but they're not selling. Right? When real estate goes down, the trades go down, the banks go down, people in the construction field and whatnot, and the suppliers go down, financial instruments go down, the people lose their jobs. That is not a good backdrop for continued gains in the stock market. So if you have some money that you are investing, take a good look at that. I think that it could get worse from here. All right, well, that's all I have to say. Please post your questions, and I will put a link to the video I did when I wrote these covered calls. And I also want to thank those people that advised me that there were even better strategies. The better strategies regarding covered calls are to, as I said, buy the underlying asset and then wait for jogs in the market to write your covered call when your asset is at a little bit higher level. You could literally double the returns on this if you were better at timing than I am. So I don't claim to be a market timer, but people are doing this, and how cool to do it with the SLV. And you could do it with the GLD and, other commodities as well. But I thought you guys might enjoy this. And so I'm up I think I'll be up 5%. And the world is down 10 and wondering if they should sell. So that makes me a happy Louie. All right, you guys, please post your comments, your thoughts, and your alternatives to this strategy, and have a wonderful day. Bye now.